the Alt Asset Allocation Podcast, exploring alternative investment opportunities available to the everyday investor. Here's your host, Ben Lakoff.
Hello and welcome to the Alt Asset Allocation Podcast. Today's interview is with Sasha Fleyshman. Sasha is the GP of a $50 million NFT fund from Arca. In this episode, we talk about investing in the NFT space overall. There's loads of different sectors and theses. TLDR, bullish, but we might not surpass those all-time highs we saw late last year during the most bubbly part of the NFT bull run. If you enjoy this episode, please share it with someone you know or give it a like, review, or comment on whichever platform you're consuming this on. I really appreciate it. NFT investing with Sasha of Arca. Enjoy. Sasha, welcome to the Alt Asset Allocation Podcast. Excited to have you on today, sir.
Yeah, thank you for having me. It's been a long time coming.
It has been a long time coming. We've been back and forth emails probably for about 6 months now. So the conversation that we would have had 6 months ago regarding the NFT market is probably remarkably different from the conversation we're going to have today, as this whole space moves very quickly, but the NFT space as well is moving very quickly. So excited to have you on today and talk all things NFT, what's going on with the market, and especially from your unique perspective, being a PM of an NFT fund, institutional money. So yeah, excited to have you on today, and we'll get into all of those details about NFTs, where they are, where they could be going. But let's start off with you and your background and how you came to start doing what you're doing now.
Yeah, I think it's a pretty basic beginning. And in late 2016, I was in college, found Bitcoin at the time. It was actually passed along by my uncle, and he told me to check it out. I found it interesting. I think I was a libertarian before I even knew what that was. So, I kind of just aligned with it. I put some money into it, didn't think too much of it. Early 2017 happened, and I just started getting more involved. I started reading, the new ICO white papers. I started reading about what Bitcoin, meant, the history of Bitcoin, the 5 W's of Bitcoin. And from there, I kind of just, dove all in. I started, missing classes and missing, parties and hanging out with friends. And I was just, getting more involved. And at the time it was Reddit and YouTube and, like Bitcoin forums. And it wasn't very, crypto Twitter wasn't as massive as it is today, but got more and more interested and took a liking to it. Started, writing some Medium posts, started, trading my own capital, and eventually, found my way over to Arca. And, the story with NFTs is more or less the same, where a project was passed along to us, Axie Infinity. And, I'm a gamer by heart. So, I took it and, I played around with it for a couple hours and loved what I saw. Went and bought some of the NFTs in that space and kind of Trojan horsed me into the rest of the ecosystem.
Nice. I say that frequently, that NFTs are a Trojan horse to get more people into it. And you have the exact example of how this could work. For my audience, can we give a little overview of Arca, what you guys do, and then specifically what you're doing with the NFT fund?
Yeah, sure. Arca is an asset management firm that focuses on investing in digital assets with institutional capital. We have a bevy of products, but specifically I work on the NFT Fund, which is a long focused fundamentals fund that is just looking to gain exposure to what we believe to be, the forefront of the space. Being that we're a fundamentals fund, we focus primarily on things that have some sort of, I guess what you'd call like intrinsic value or floor value, whether that's through cash flows or through utility, through some sort of, supply demand dynamics, but really just an all-encompassing fund that looks at the NFT space, whether it be, tokens or the NFTs themselves, and gaining exposure in what we think has value as the space continues to grow.
Fascinating, and actually pretty forward thinking for the NFT space. So for most people, NFTs are associated with flipping NFTs and the terms like institutional money, long-term holding, fundamentals. These probably don't come into their world very often. How much can you talk about assets under management or more around the investment thesis for the fund?
Yeah, so the AUM is public. It's we raised 50 million in capital. We went effective January 1st of this year, so we're give or take 6 months old. And in terms of what we're looking to invest in, we kind of take a top down to bottom up approach where we try to find the sectors and the ideas that we think will be big either today or moving forward, and from there working bottom up to try to find projects that fit that scope, and trying to fill out those buckets. So for some examples, you have like digital land and real estate, you have in-game assets, pass-through or cash flow producing assets, DIDs, identity tokens, AI, social and utility tokens. And then you can go to the actual ecosystem token side. You can talk about gaming, metaverse, infrastructure, but basically you identify the sectors in which you want to play ball in, and then you go from there and find the players and try to see which ones best fit your thesis.
Yeah, I want to dig into those. When raising this fund from institutional money, $50 million, the type of investor that invests in this, it's just they want exposure to this NFT asset class, or what's kind of the thought process for these guys?
Yeah, well, obviously I can't speak directly for them. I don't know why everyone made the decision they made, but the way that we pitched it to them is that this they've probably been hearing a lot about this space, especially over the last 12 to 18 months. And while it is very exciting, it's also very there's a lot of survivorship bias, and there's a lot of hurdles to jump through to have a proven track record and a played out thesis in this space. So we tried to impose upon them that there is an actual investable asset class here, and it's still very early. It should be treated as like a growth sector. It's not well defined. You're prone to very volatile swings, as we've seen in between the 6 months where you emailed me versus us going on this chat. The whole market has fluctuated 80 to 90% to the downside. So it's definitely a highly volatile market. And what I explained to them when we were pitching the fund is that we're probably in our 2017 moment for NFTs,
Yeah.
where there's a lot of bold ideas, grand visions, prices kind of overstepped the actual follow through, and you kind of saw that the end product for a lot of these didn't match up with what people were talking about. And so you saw a lot of capital leave. It sure doesn't help, the macro conditions and what's happening in crypto at large. But this was kind of inevitable, right? We had a 0 to 1 moment in this space. And what we were trying to impress, and hopefully we did impress, was that we're not stopping at 1, but 1 to 2 is not going to look anything like 0 to 1. So, we have a pretty big vision for what the space could be. And my hope and guess is that the investors in the fund also see the value in this sector. And as such, they wanted, like you said, exposure to the space.
Yeah. And I mean, the NFT space, well, every asset class has been hammered in these last like 6 months, but the NFT space as well. I mean, floor prices have dropped substantially in ETH, and ETH itself has lost 75%. So like in dollar terms, it's down, but this whole, it's early. Yeah, definitely could be some 2017 moment sort of valuations on a lot of these, but I think we all agree that the space in general will be much bigger. So let's jump into these sectors or ideas. So I just jotted them down, but digital land, in-game assets, DIDs, AI, social utility tokens, gaming, metaverse infrastructure. Did I miss any?
That's a good place to start. There's a ton of sectors, some
Yeah.
in which we play, some in which we're watching, some in which we're just getting started with. It's definitely, I don't think there's any sector that's solidified yet. I think it's still figuring itself out, except for maybe collectibles, and they'll still iterate significantly. But that's a good place
Yeah.
to start.
Yeah, and it's also such a broad place to start, right? I mean, this is the thing of a non-fungible token, a token that is not fungible, it's unique. It covers so many different categories, like the difference between digital land and in-game items, DIDs, just the first three on that list these are all drastically different. So I guess, how do you think about allocations of fund assets across these different buckets? Let's start there.
Yeah, I mean, there's definitely a ton of factors. Some range to the type of asset it is, the type of return profile you're looking out of the asset, whether or not you think it has some sort of intrinsic value in a floor price, or you think it's a binary outcome of either, 10x higher or 100% down. All these affect, the portfolio guidelines and the sizing mandates and how we tranche the risk. But it's, like for example, there are things like digital land and real estate that have cash flows, whether it's like a token yield or it's it's a productive asset that you can, extract value from. Like these will have like a fundamental value framework that we can at least work with on a very base sense. And that'll help us shape whether or not we think it's overvalued, undervalued, valued at par. And then from there, we can decide what our 2-5-year vision is for this asset class, for that asset specifically, for that sector, and decide whether it's a good fit. For things like, collectibles, it's more of a play on, the grassroots effect of building a brand. And, it's of our opinion that to play the collectible space in a long-term format, you have to bet on people that are creating horizontal growth, right? That they're trying to build intellectual IP. So there's a whole bunch of different facets to play with these different sectors, and not all of it's set in stone. Like I'll be the first to admit that I don't consider myself an expert. I don't think anyone in this space is an expert yet. I think we're all just learning, and some of us are just spending more time learning, but it's very, very new. And a lot of this is still being shaped. So I'm not going to cement any of these ideas in for how each sector operates, because I think that they are all prone to movement and to realignment with the new market dynamic.
Gotcha. We've talked in the last 6 months, things have been like, and we'll talk a little bit more in generalities and not like the specifics, but the last 6 months have been pretty brutal. Prices down. The real people are obviously still building, but a bit of the craziness has kind of gone away. Although if you were just in NFT NYC, it did not feel like a bear market there. I think people had allocated their budgets 6 months ago or something. But looking at these, thinking about these different sectors where we are now, which ones do you feel like have the most potential, and then which ones would be considered a little overhyped?
Yeah. So I don't know if either yourself or people listening in use the Nansen indices, but I find Nansen a very helpful tool to see what sectors are doing within our space. They have their NFT 500 index, which is just a broad scope, and they also have they separate it out by blue chips and gaming and art and metaverse and social. And it's given me a pretty good perspective of what the market is perceiving as overvalued and undervalued. For example, the gaming index right now, everyone knows that the gaming sector has been hit rather hard. But just to quantify that, the gaming index is down 89% year to date against the dollar. That's pretty significant, right? You also have things like the blue chip index down 64% against the dollar. And when ETH is down 71%, you could argue that the blue chips are actually outperforming. So that kind of gives me a good basis point to jump off of. I'm obviously a very big believer in NFT based gaming. I think there's a few significant kinks that have to be ironed out between the guild structure, between the play to earn mechanics, and the inflationary supply schedule. But I don't want that to detract away from just how important the development of NFT backed gaming is for the gaming industry. And you hear a lot about how traditional gamers are either wary to downright, just against NFT use cases in gaming, and they have some, pretty legitimate fears. They're hesitant for like play to win mechanics. They also don't really trust this system. And then you get into the more, out there arguments about environmental impact and, just outright like ethical debates of NFTs. And so there's a lot of like mistrust in the space, but as an everyday gamer, I do think that this is a big step that is very pro gamer. It kind of delineates the relationship between investor and gamer, where now the game, whether it's a company or a DAO or a product, like a producer, they now interact directly with the gamer because the gamer is directly incentivized to see the game succeed. So you have higher input from the gaming community. You have more focus from the the game studio to appease the game community. So it's very mutually beneficial, in my opinion, to see it go this way. I think that we're still just very, very early in the product stage. As I was mentioning earlier, that it kind of felt like 2017. There's a lot of great ideas, but in reality, it's very hard to get off the hump and actually play an NFT based game right now. But I don't think it's going to stay that way forever. And I'd be very hesitant to write it off. So things like that are very attractive to me at these levels. I'm actively looking for new games that are coming. You know, they've obviously had to have learned from the mistakes of games prior and hope to build on them. And I'm also looking at, you know, some of the big players that have been around that may have, you know, seen these mistakes come and they're going to iterate, and they've been in the space longer than anyone, and you know they're best set to fix them and move forward. So gaming is something I'm very excited about. I can't speak too much to art. It's just very hard for Fundamentals Fund to focus on art. So I'm not going to call it overvalued. I'll just call it something that I don't spend too much time taking a look at, just because it doesn't fit what I'm trying to do in this fund.
Right. Yeah. The gaming, and my listeners, I mean, I have gaming, blockchain games has been like a theme. So just looking back, episode 77 with Sami, 73 with Ryan Wyatt of Polygon Studios, and 71 with Board Elon Musk, all on blockchain gaming and kind of what the potential could be. So I think at this point, listeners hopefully have heard a little bit about some of the possibilities. It's interesting with you actually being a gamer. Most of these others are investors or kind of fans from the outside, but what there are some valid concerns by gamers against NFTs in games, and you mentioned a few of them. But what are the most valid concerns by gamers about having blockchain games more prevalent?
I think that the argument that if you try to turn every aspect of the game into a financial product, you stray away from being a game and stray towards it being like almost like an economy where you have like, you know, you have workers, right? Like nobody wants to feel like an employee logging into a video game, right? The reason that video games traditionally are pretty much recession proof is because you don't play games for monetary purposes. You play games because they're fun, right? If any gamer listening like thinks about the favorite game they've had, you know, you've put in hundreds and hundreds of hours, not because there's a dollar value attached to it, for unless if you're, you know, a professional streamer, but because, you know, you enjoy playing the game. And that's what really makes a great game. And what we've seen thus far does not line up with that, right? Like there was the reason that NFT gaming fell off so hard when the bear market started was because 99% of it was financially motivated. And once the financials went away, then, you know, you basically, your gamers were actually just mercenaries and they no longer had a reason to play that game. So I think that's a very valid point that every game studio or new product should be thinking about is focusing on making the actual game fun from the get-go and incorporating NFT assets as you see fit. It doesn't have to be an automatic, you know, from day one type of event. And you know, the other argument that I'm still trying to get my head around is the pay to win type of mechanic, where like if you don't have enough capital, you're stunted in the game itself because you don't have access to all of the in-game assets. I partially agree with that, and partially disagree. I think that there are, you know, there's always going to be types of gamers, right? There's going to be casual gamers, there's going to be competitive gamers, and they're all going to have different facets. I think if you look at what like the sport gaming industry has done with like FIFA and Madden, like the Ultimate Team, you know, you can buy I don't know what they call them, like the coins in game to go buy your Ultimate Team players, and you can kind of skip the path and go from 0 to 100 rather quickly. It's frustrating for sure, but I think that this is something that already exists. And for those that don't enjoy that type of gameplay, there's, you know, I'm just thinking like there isn't really a crypto based like first person shooter. And if there ever was, those that play FPSs know that there's not really a way to pay to win those games, right? Like everything that you can buy in an FPS is cosmetic. So you can buy gun skins or like decals or, you know, something for visual effect, but not for in-game performance. And I think that that will also have inherent value. You look at like CSGO and what some of those like sniper skins are selling for on like Steam Marketplace and in the aftermarkets. I can't remember the name of it, but there was a sniper skin that sold for a couple $100,000 in cash like in the last year. Like that's like this market already exists, and NFTs are just a vehicle or a vessel for it to become better. Like when I played RuneScape and Diablo as a kid, like I used to have to go on like Blizzard forums, or I think it was Activision forums, and people would like PayPal you. You drop the item in game and they'd send you $10 on PayPal, and it's very like very clunky, and a lot of times people got like items stolen from them or never got paid or charged back. Like this is just a system for delivering an already wanted mechanic. I think that much of the animosity is because of how the mechanic has played out thus far. And I just don't think it's fair to judge a gaming industry 2 years into its existence when most games take 5 to 7 years to fully go from, idea to product.
Yeah, and I think that the difference in timeline expectations is one of the biggest ones in the gaming industry overall. Is like to create a fun game that people love and want to play, these things take a lot of time. And I mean, buying the skin for hundreds of thousands of dollars, people don't understand. But when gamers are spending the majority of their time in this metaverse world game, yeah, I mean, who wants a Lambo if you spend outside in the physical world? If you spend all of your time in a game, right? You rather want that skin. It's the ultimate flex. You mentioned, I mean, some of the issues with this last bull run in gaming, play to earn, gamers being a little bit mercenary capital. This is very similar tune to kind of the death of DeFi, I guess, people just jumping from one yield farm to another. In terms of like what can game developers learn? Obviously the pay to play or play to earn sort of mentality, are there any good aspects of that that need to be carried over to like V2 of blockchain games? Or what kind of blockchain game mechanics do you think are really, really good that will be integrated into this next version of blockchain games?
Yeah, I think that the sweat equity portion of this whole concept makes a lot of sense. The more effort that you put into the game, the more benefits that you take out of it. The person that puts in 100 hours, toiling away and chopping wood should have some sort of benefit. For those that say, I don't want to spend hours chopping wood, I will transact with you to take that wood off your hands. I'll give you XYZ in return. And the beauty of that aspect is a lot of this space is interoperable, not all of it yet, but there are some, there's bridges and there's, EVM compatible, non-EVM compatible. You can port over from game to game depending on where you're at as a gamer. If you play League of Legends for 7 years and then one day decide I no longer want to play League of Legends, you can basically take all your cosmetic skins and say I no longer have a use for this. I'm not logging in again. And someone else on the other side says like I want those skins, I will pay for those skins, and you can take that capital and go get cosmetics in a different game that you're just starting out in. So it doesn't silo your capital, both your sweat equity in terms of time and your like actual capital. It doesn't leave it stuck in a game itself. And I think that's very important. If you believe in Web3 and the interconnectedness of what we're trying to build in this entire space, and I use we as a general term, I'm not really building anything. I'm just watching other people build and clapping. But if you believe in that, then you have to believe that there has to be some method of value flow between interfaces, right? If you spend all your time siloed in one interface and you cannot move that around, then it just becomes traditional gaming with the word blockchain attached to it. And so that part I think should stay, and in my opinion has to stay, where in-game assets should be yours to own because you put in the effort to actually extract those assets. Whether or not there should be a flywheel hyperinflationary mechanic attached to it, I don't think that will survive much longer in the new iterations. I think we've learned very clearly that while it is very I'll call it beneficial to both the assets and the game, on the way up, it's also very, very detrimental on the way down. So this positive feedback loop mechanism of having an asset that based on net inbound demand is just a dangerous game to play. So I think what you're gonna start to see in the new iterations, and maybe the analogy isn't perfect and people won't like it, but almost like a game side Fed, where they can kind of work to dampen the volatility of these assets, right? You shouldn't have an in-game asset that is required for base functions go up 6x in a week, right? That makes the game instrumentally harder to play and difficult. And then you're gonna have people that come in too late and get, stuck with the short end of the stick. Like nobody wants that. It was nobody's goal to have people, just get into NFT gaming at the top. So that mechanism has to change. And I think some sort of, DAO based, whether it's through governance or through something else, where you can kind of control the net issuance or net burn of an asset like that is earned in game, to make sure that there's not, big snap movements up or down that would significantly affect the actual game itself.
Oh God, algorithmic stable in-game assets currency. Here we go again. But really, I mean, that's the parabolic rise of these cryptos make it fun, but like for usability, it's not the best. So jumping out of in-game and back to like NFTs in general, this year, I mean, we've seen a decline in OpenSea, like total volume traded of NFTs. Do you see this trend continuing? I mean, how do you think about it as running a fund with liquidity premiums? Just talk to me about liquidity in general in the NFT space.
Yeah. So it's actually something I've spent a lot of time on in the last few weeks. You kind of saw the run for the hills exodus, I believe, at the end of May, where you saw the wrapped ETH offer acceptance rate jump to basically all-time highs, where everyone was just slamming. I don't know why we call it offer in this space, but everyone was slamming the bid on their assets and just taking whatever the wrapped ETH was afforded to them and just getting out of everything. And you saw undercuts by 10-20%. You saw, liquidity just vaporize, activity dropped off. And, there was fear that, like, a lot of these would just be gone forever. And that still may be true. But what I've seen in the last few weeks is that right now, we're, like you said, like, liquidity is dry, and it's like the price that you see isn't exactly the price that it is right now, right? Because if you, and I know this firsthand, if you go and try to offer out, which is bidding, if you try to go bid on these assets, like, you're not going to get hit on these assets that are what I guess you'd call premier assets. Like, there's no more room for negotiation. You have to lift them, or you're not going to get the asset. I've been trying for 2 weeks to accumulate assets, and I think 2% have been accepted. Like, that is very low for what you'd consider a market like this right now, where, people think NFTs are dead and, like, people are running out of money and they'll take whatever they can get. We've been rather aggressive in our bids. I think 5 to 10% below the offer, and no nibbles at all. So I find that very interesting. That wasn't the case a few weeks ago. So if anyone wants some, sliver of bullish bias, when it gets hard to buy assets, it starts to give me a feeling that we're reaching a point where there's just not that many sellers left. There's a big difference between having no sellers and between having a lot of sellers and having no buyers, right? Like, right now, we have no buyers, which we can see, right? Volumes are just, down 80%, but we also don't really have sellers. So it may mean that we flatline for a few months, and maybe something else takes it down again, where people become sellers again. But more likely than not, in my opinion, I'm rather bullish premier assets in this space. I think that the selling has stopped, and now we're just in a, all quiet on the Western Front type of ordeal, where everyone's just looking around, checking for dead bodies and making sure everyone's okay. And then eventually there will be a signal that, hey, okay, it's safe again. And once people decide that it's okay to get back involved, I think you're going to see a pretty vicious snapback. Because, like, if you pick your favorite project, go look at that asset and just go look what the price change would be if you bought 10, if you bought 20, if you bought 50, right? Like there's big jumps, there's big price gaps across all of these big assets. And, I try to do my best to not be afraid of the illiquidity of this market, because that's what makes it very interesting, right? This is a growth market, and it's basically a step between trade by appointment and liquid. So you have to kind of navigate those waters and understand that, you can't get oversized and, get stuck in something, but also like this is an opportunity for many people. Like this is, if you can find things that you believe in and you just so happen to be right, like this is a very opportune time, because like there are no bidders in the market, but there's also no sellers. So that we're just kind of in no man's land right here.
Yeah, that is kind of the annoying thing. I have been putting out quite a few bids and they don't end up executing. So either people are not selling because they're bullish, or they've just logged off for the last month and they'll be back to sell in mass. Probably the former rather than the latter. So liquidity, I mean, your thesis is liquidity will come back and improve. What catalysts are you kind of thinking will bring in more volume or more interest and kind of get this back up?
Yeah. So I think it only, I don't think that the entire space will come back flying. I think that you're going to see a lot of these projects die off the same way you saw a lot of, 2017 liquid tokens that, had grand ideas, they didn't pan out, and more or less they're zombie tokens. Like I think that will happen. And we have to come to terms with, maybe not everything in your NFT collection is going to make it, right? Some of these will have been experiments and very expensive experiments, but they were. And I think everyone knows when they get into this space that this is not a 100% hit rate type of space, right? There's going to be some losers when you allocate here. The premier assets, or either the incumbents or whatever comes next in the next cycle, those will get improved liquidity, in my opinion. And I think that starts with, one, a strengthened digital asset market as a whole, right? It's always good when there's net gains in the space, because for better or for worse, NFTs, especially those that don't carry intrinsic value, they are definitely a luxury purchase, right? Nobody's going to be spending $500,000 on a Bored Ape unless they have that kind of excess gain from the rest of the space. And you find that a lot of capital in the space is recycled. So I think step one is that you need digital assets to come back as a whole, which it will. Nobody knows the timing, but it will. And two, I think you just need to see some products starting to actually deliver, right? You have things like Bored Apes. They just did their other side land demo. I know Illuvium is gearing up to do their Illuvium Zero land play. Axie just turned on their staking bridge, and they're going to, they came out with their new origin set, and they finally had it as like a ranked season with rewards. Like you're going to start seeing things come through. And once you start to see execution happen, then you'll see people get more excited. And I think that will do better to carry this out of the mud, I guess. And on the collectible side, I think NFT NYC was actually very beneficial for that sector. I think like the Azuki meetup, Doodles, and some other projects that I don't pay too much attention to. They had very positive feedback from the events that they hosted, from the interactions that they had. And I think that sector is completely different than what I would talk about in the gaming sector. That sector is very socially motivated. And, to see that those communities are thriving, even though everything's, down 80%. And, like you said, there's a lot more people there than most people anticipated. Like that's a healthy sign. It just doesn't always immediately reflect in the price point. And I think a lot of people tether to the all-time high prices and say like, we're not back until we bust through the absolute pico top of where we were last cycle. And I just don't think that's a fair thing to look at. I think that you're going to have overextension to both sides. I think right now for the best assets, we're overextended to the downside. And I think in November through January, we're probably overextended to the upside. So normalizing to the mean is a normal process. And then from there, it's just about execution of what you say you're going to do, because this is a hyper social investment game, right? Like everyone that's in this is very motivated. The discords are humming, and people are quick to catch you if you're not doing what you're saying you're going to do.
Yeah. And so you mentioned NFTs as luxury purchase with excess, the wealth effect and full effect, right? People make a lot of gains. They're fine spending 150 ETH on a PFP. But so curious how you and the fund view NFTs as like on a risk spectrum. Is it just a high beta crypto in general play, or how do you view risk?
I think there are types, right? Like the assets that we're investing in, I personally and the team carry the belief that they have quantifiable value that should be irrespective of what's happening at large. Like everything in this space has high beta correlation in general, right? It's not gonna like I'm not expecting something to have like inverse correlation or like a 0.2, but over the long term, things that have fundamental value, I expect to be largely removed from the day-to-day movements of the space. The difficult part in that at this stage of the NFT market, and it's just the harsh reality, and we've seen that actually in the whole space, that the KPIs that we all look at, right, whether it's transaction count or users or volume or TVL, it's hard to forward project those numbers, right? Because those numbers are very market dependent. So you cannot look at the last 6 months and forward project the next 12 to 18. You have to take it, probably a month at a time, to be honest. And either have a very long dated view of like 5 years or have a very short dated view. But a lot of people get caught in between for the next like 6 to 12 months. And in reality, like when the market turned, the KPIs turned, which caused the market to go down again, which caused the metrics to go down again. And it's a problem that we're going to have in this space for a little while at least, just because we're like, I just still truly believe this whole space is in a growth sector, right? We're not fully established. We don't have, hundreds of millions of users, right? I think OpenSea at its all-time high had 550,000 daily active users in terms of like wallets interacting, buying or selling. It's like 500,000 is a tiny number, right? So like those numbers can ebb and flow drastically depending on market conditions. So that's something that people still have to pay attention to, and that's something that we're cognizant of. But a lot of our investments are based on the merit of the asset itself, not its relation in beta to base assets.
Makes sense. I'd be curious your thoughts or position on like NFT meets DeFi. So the thought of derivatives, NFTs as collateral, renting out your NFTs, things to like increase liquidity of NFTs. What are your thoughts on this space in general?
I think it's a great idea. The derivative market for NFTs will be a big boon to the liquidity issue that we have in this space. Derivatives markets tend to trade at multiples of spot in general, and this should be no different. And having it's going to get tricky, right? You have basically three parts of any. I'm going to focus on collectibles because that's probably going to be the biggest derivative market to start. You have three categories. You have the floor, you have like the high, like the ultra rare assets, and then you have like the middle, like no man's land. And the reality is that like in the beginning, the derivatives will probably all have to be focused on floor, right? So it's just beta exposure to the actual project. And I think that that's going to be very beneficial to give people a way to participate without actually having to acquire a whole asset or work with something that they don't understand. Maybe they're not comfortable with NFTs, but they are with like ERC20s. Fractional kind of kickstarted this off by doing their you could splice NFTs into fractions. You have these vaults that you can put in and you get tokens that represent the vault as a whole. But I think that these derivative markets will be very helpful. As for the lend borrow market, it's something that interests me a ton. It also kind of scares me a little bit for a multitude of reasons. One being that this space moves very, very drastically and on very little volume. So I'm worried about both, like a phase shift in the mark price as well as like potential manipulation. If someone lends out a bunch of or like post collateral for a bunch of a certain asset, they can fluctuate the price to, kind of manipulate how their LTV operates. And I find that a bit scary in the beginning. I think derivatives have to take off first, but I think it's very interesting. You're going to have loan to own mechanisms where people will, lend out collateral or lend out assets to the person posting the NFT with the hopes that they don't repay and you can claim the asset. You're going to have people that grab liquidity out of their asset because they don't, they want their asset to be productive in the interim. And there's also going to be debates on how to deal with the derivative assets, right? If you were lending out an ape during the ape token drop, like who has the rights to that actual asset, right? Like are like if someone's posting their ape as collateral, do they still have the rights to the derivative, or does the creditor have it? What if you need that asset to verify with the interface, but you have it lent out? Like that part's going to be interesting to see how that works out. But
Very
I think
interesting. And for my listeners, I mean, so if you had a bored ape, you got like 10,000 ape tokens, which at one point was like $200,000. So if your NFT is sitting in a smart contract used as collateral, somebody else is using it, or lent out, whatever, it gets very, very blurry, and that's a large amount of money. And this is just one instance of what this could look like. Sorry, Sasha, but continue.
no worries. I think it all just boils down to there's going to be a big push for what is the standard in this space in the lending market. Like what, you're going to have, is it going to be governance based? Is it going to be, hard and set and fast rules? Do the assets actually, because technically all the products that exist today, the assets go into a smart contract. So the smart contract might have ownership of the claim. I think it's going to cause a lot of problems until it's fixed. And then once it's fixed, you'll see another 0-to-1 movement in the lending market. It's something that we're actively looking at. We're still doing our due diligence on. The documentation is, some of it's there, some of it we're trying to reach out to the team and try to figure out. But like the upside to that type of market is massive, and someone's going to get it right. And someone may already be getting it right, but it's going to be slow and steady until you reach that point.
And there'll be bumps along the way. I mean, but thinking about somebody like you guys with millions of dollars, tens of millions of dollars of NFTs, if you're able to post those as collateral and have a couple $1,000,000 extra to dump into whatever, pretty appealing. Next one. Okay, so I'm a bit of a permeable. I need to get some like bearish people on here to stop my echo chamber of bullishness. But where could things go wrong? Where are blind spots as crypto NFT permeables? What valid arguments do these non-NFT people have from your perspective?
Yeah, so let's start within this space before we go to the non-NFT people. I think a big kill factor for this space is there's a big issue going on right now with OpenSea and what they're doing with blacklisting assets. For those listening, the basic sense is that you buy an asset through OpenSea, which is the marketplace, and someone who sold that asset goes and tells OpenSea that they're marking that asset as stolen, and OpenSea, flags that asset as suspicious, and you cannot transact with that asset anymore until they clear it up. And I haven't heard of a case where they've cleared up anything to date. And this happened once or twice. There were some big thefts that happened in the last 6 months, and it was understandable. But now what's happening is that it's starting to get gamed, where you're starting to see some of these big projects have 3, 4, 5% of their whole collection being marked as stolen, because people can just sell the asset and then mark it as stolen, and then you have this liquidity discount attached to these assets because the main marketplace no longer allows you to transact with them. And you're seeing it happen right now. There's about a 10% discount for assets that are marked as blacklisted. And it doesn't make that much sense, right? Because the in ecosystem value of those assets remain the same, right? All airdrops will still be 1-to-1. All in-game utility will still be 1-to-1. Like there's no asset depreciation. It's just a liquidity suck. And it's becoming problematic. And so I think that if that doesn't get fixed in the next couple of months, you're going to start to see some big players starting to huff and puff about the issues in that space. And if it doesn't get fixed, you're gonna see that come to a head. I think that's detrimental for the space right now, because OpenSea has by and large the vast majority of the market share of the space. So they, whether or not we like it, they act as the de facto leaders. And I'm confident that they can work to fix this. I'm not sure if it's a legal thing or just like a company guideline, but there is something wrong with what's happening right now, and I think that it's imperative that it gets fixed. If you look outside of this space, it's very hard for people that don't it's hard enough for us that are in this space, but it's very hard for people outside of this space to look at a Bored Ape and say, yes, that's worth $400,000, or to look at an autoglyph and say, yes, that's worth 200K. It doesn't make sense to those people, and in part, they're not wrong, right? There are so many assets in this space already, and it's just abundantly clear that the vast majority of the assets that did so well in the last year or two will not eclipse those levels again, right? Like there were some severe overextensions, and I think what our market has done to combat that is you've started to see the horizontal growth, right? Instead of having one asset in the ecosystem that goes to $1 million per token, you have airdrops, right? You have subsidiary assets that also give access to the ecosystem, and you grow your user base from 10,000 to 50,000. And now there's a smaller price point to jump into. But the fact of the matter is, like, a lot of these are being priced in as something that already succeeded. And to the detractor's point, there's not much on the execution point that has happened for a lot of these assets, right? They have big communities, they've grown, they've, a lot of them have hit the mainstream. There's been some partnerships, some IP stuff, and it's all great. But that is the minority, right? The majority is a lot of big dreams and big prices, and it just remains to be seen on how they're actually going to play out. So I think a lot of the main annoyance from the outside crowd is price based, because these things are just so egregiously priced relative to what they think they would be worth, and they don't understand that. And I can't help but understand their point of view from the outside looking in, that some of them I think are fairly priced, but there's also some that I couldn't even argue with them whether or not it's priced right. There are a lot of NFTs in my personal portfolio that I'm looking at right now and saying, why the hell did I pay 6 ETH for that back in the day? So like everyone has one of those assets in their book,
or a few.
But
yeah.
Hopefully as little as possible, but yeah. It's definitely like a real thing. So in terms of like whether NFTs are going to be used in the world moving forward, I think it's without a doubt. I obviously have staked my claim, and I do what I do because I believe that. As for the environmental concerns, that's a whole nother podcast, but I'm just very, very against the notion that NFTs or even crypto at large have like a net impact on the environment through carbon emissions. So that one's a really hard one to debate. It's like there's facts and then there's opinions, right? Like the fact is that like Bitcoin mining and as of right now ETH mining use a lot of power, and that's correct. And where you get into problems is that people start to extrapolate that because of the energy consumption that they're killing trees, or like using more energy than 90% of the countries in the world. And there's just a lot of talk about like what type of energy these miners are using, and whether they're using at surplus or they're using in places with low demand. You need to like study basically electricity and thermodynamics to like fully understand what's going on. And I think that you have a lot of people making arguments with good data points but drawing pretty bad conclusions, and that's going to be a really hard one for our space to deal with, because when people get entrenched in an opinion and they have data to back it up and that data is factually correct, it's really hard to say like, hey, you have the right information, you're just looking at it the wrong way. And we're not really in an age, both in crypto and in politics in general, where the Overton window is available for us to have these kind of discussions in a friendly way. So I'm worried about that. I have hopes, but I think that we're going to be dealing with the electricity debate for decades.
Yeah. Well, fortunately, the merge and proof of stake, hopefully this at least delays it for a little bit. Last question. I see a lot of tools that exist for monitoring NFTs. So you mentioned Nansen earlier, but what in your opinion is the best tool for monitoring NFTs? And then for like the NFT trader, and I know you're a long-term trader with the fund, but what sort of KPIs or changes are most helpful in kind of predicting potential price movements?
That's a great question. It's one that I ask myself a lot. I think that the tooling in this space is still kind of coming out. There's a lot of basic tools out there, but I haven't yet found anything that I would consider like day to day. Other than, I use Nascent a lot. I use Dune Analytics a lot. Dune Analytics just scrapes data from sites and kind of compiles it in a way that's easy to digest. But I'm actively looking for better tooling to better understand what's happening in the space. A lot of it right now is done manually internally, and more than happy to take a look at any products that are trying to solve that. In terms of metrics that you're looking at, you can look at, you have social metrics like followers and people in Discord and activity in Discord. You can look at traction based on like unique holder count and velocity, like how often are these exchanging hands, what's the volume relative to the cap. You can look at like the social reach based on like the activity that's happening relative to the other spaces. KPIs that I look at for gaming would be things like user count and revenue and like historical asset pricing and trend shifts and stuff like that. It really is dependent, but I think that there's a ton of information out there, and I cannot confidently say that one type of information is the right way to look at this space. I think that I'm kind of trying to soak it all in, work with the analysts and see what has been repeatable, what hasn't. Do things need to be paired together to make sense, or is it all just too new? And right now we're just supposed to learn. And I think on a move forward basis, you'll start to see more fundamental analysis of what's going on in this space. I'm already starting to see it with, people are comparing the mycelium drop to the Bored Ape token drop and like comparing, float and, user bases and token supply. And so you're going to start to see comps come into the space. You're going to start to see people trade based on sector bases. And I think that'll start to develop a more strict guideline of what matters to this space.
Yeah, no, that's great stuff. Well, Sasha, this has been great conversation. Where can my listeners find out more about you, Arca? Where would you like to send?
I'm on Twitter, Arca Chemist. That's where I post all my musings. We also have a website, ar.ca. We post a lot of outbound content from, podcasts to articles to, educational material. And, just feel free to reach out. We try to be as public as possible. And yeah, it was a pleasure. Thank you for having me.
Yeah, of course. Been a long time coming. It was definitely worth it. Appreciate you coming on, and thanks a lot.
There you go. First off, thank you very much for listening all the way through. I hope you got a lot of value out of that conversation. As always, you can find show notes, links, and more at altassetallocation.com. Please share this with anyone you think might be interested and derive any value from this conversation. And as always, you can reach out to me for any feedback or questions. Please give the video a like, or even better, subscribe on YouTube or your podcast player of choice. This really helps others find the podcast or the video as well. Thanks a lot. Hope everybody has a fantastic day and stay safe out there and invest wisely. Cheers. 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 Cheers.